Before we jump into the video, we have got to talk about the new flavor of Mountain Dew. As you guys can tell, I may or may not like Mountain Dew, and so they came out with a new Halloween special called Voodoo. It's this week. Hold up, I gotta get closer. I gotta scoot all the way closer to the camera. Check this out. Where's my camera? So they have this new flavor of Mountain Dew called Mountain Dew Voodoo. It's pretty incredible, so if you guys haven't tried it, go out and buy it. Support Pepsi, support Mountain Dew, and go ahead and buy this Mountain Dew. But anyways, let's go ahead and jump into my Fidelity portfolio and take a look at the account value as of today. Right now, the account sits at $30,385, and you guys have watched me over these last couple months since switching to Fidelity. It has went as high up to almost $33,000. It's went down to like $26,000 at one point. Last week it was at like 31, and now it's right back almost to where I'm started. I'm up just a little bit, but so far I want to go over to my performance tab and show you guys what I unlocked. Fidelity has this awesome feature where after 1 month of being with your portfolio through Fidelity, they will show your performance versus the 4 major market indexes, which is the Dow Industrial Average, the S&P 500, the NASDAQ 100, and the Russell 2000 Index. Now, if you don't know what all 4 of these indexes are, the Dow 30 is 30 companies that is pre-selected to get investors engaged on the economy. These are supposed to be most reactive towards jobs, towards the economic growth, GDP, things like that. Next up, we have the S&P 500. That's the top 500 companies in the world. This is a lot of your major players like Apple, Amazon, Netflix, Google, Walmart, Nvidia, Home Depot, Pepsi, Coca-Cola, pretty much any top 500 company in the world. This is Coco, by the way. This is Coco. Coco, hey, look over here. Yeah, she doesn't care. But this is my cat Coco, so I have a fun time looking at her butt. But the S&P 500 is the top 500 companies in the world. The NASDAQ 100 is a lot of your tech giants, like I said, like Facebook, Apple, Amazon, Google. And then you have the Russell 2000, which is the smaller cap companies, and a lot of your smaller cap companies, that including ones that I own, like Corsair Gaming, Tattooed Chef, Clean Spark. Those are the 4 indexes. But if you look at my portfolio, it sits right at about 30,000, which is right where I started with. And here in the next week or two, I'm going to be making another big deposit, so it's going to be going up in value here pretty soon. Now let's go ahead and jump over to this Google Doc sheet that I made, and this is my goal between now at age 22, from the start of my birthday at age 22 earlier this year, going all the way to 2039. This is my chart on my goals of what I want my Fidelity account to be by age. Now I'm going to go over how I calculated this and what I need to do to get to $1 million in my Fidelity account by age 40. Now I know a lot of you guys are going to hate on this video and say that it's impossible to get there. And it is not going to be easy at all. These are very optimistic goals. It is very likely that I will not meet these. I could not even get halfway there. I am not saying that I am going to hit this goal or it's going to be so easy for me to do it, because the last thing this is going to be is easy. I'm going to have phenomenal returns, consistent deposits into my accounts. I'm going to have to spend relentless hours in the market like I do already. So this is not going to be easy one bit. But while I don't expect this to even be remotely easy, I am going to do my hardest to try. And starting today, I am going to compare this month after month, year after year, to give you an update of where you guys should see whether or not I'm on track to hit this goal or not. Now, there are going to be times where I'm probably ahead of this goal, especially in the beginning, sometimes where I'm way below it. Either way, even if I'm way off, I'm going to show you guys tit for tat. And so I'm going to show my returns compared to the average in the market, the 4 market indexes that we just talked about, and then I'm also going to show myself compared to my investment goals that we're going to go over. Now, if you go ahead and look at this, how I calculated this return is I am starting with 25,000. Now, I've had multiple brokerages and I've had cash all over the place this last year or two, and I don't know exactly down to the dollar what I had on my birthday of this year, but I know it was around 25,000. Give or take a couple grand, I had about 25,000 invested in the market at my 22nd birthday of, what was that, so about 7 months ago, okay? Now we're going to start with 25,000 on the dot. Let's go ahead and take a look at this compound interest calculator. This is the governmental one that I like to use. It's really easy, it's really simple, and it's a website you can trust. This is where I always do my calculations, but if you want to look at this yourself based off your age, or if you want to look at based off your income, if you're investing more, if you're investing less than me, and if you want to change these investment returns around, then go ahead and do so. But this is how I'm going to get to this goal. So starting off with 25,000, and then we're going to invest $500 a month. Now, my fiance, my soon-to-be wife, Katie, is committed with me to investing a minimum of $500 a month. Now, if I'm lucky, if I'm successful, if I have some great jobs in the future, then I'm going to invest more than $500 a month, hopefully. But if I'm able to do more, then these numbers will change dramatically. My investment return will need to be much lower in order for me to reach my goal of $1 million by the age of 40. Now, the absolute minimum that we have agreed upon is $500. That's what I'm committing to. It doesn't matter how much, how little money I make after college, I'm committing to that number. So we're going to use $500 a month as this example, and we're going to do this for the next 18 years. Now, like I said, this was from the start at age 22, so add 18 years onto that. I want to have this on the day I have my 40th birthday, okay? So we're putting 18 years, and then next what we're going to do, and this is the one where you guys are probably going to start tuning out of the video, or maybe you think that this is realistic, maybe you think it's completely off the wall, and I will tell you right now, it is probably very likely that I do not hit this goal. Once again, this is a hopeful goal. We do not want to set a goal of, oh, I want to have 100,000 by age 40. I will obviously have more than 100,000 by age 40. I don't want to set goals that are easy to beat. I want to set something that is way out there that I can hopefully reach for the stars and hit. So this is not easy to hit. Once again, I do not expect this, but this is what I'm going to try to do. Now, what I'm going to put in here is 17% returns annually. Now, over the last couple of decades, we've seen returns that are in the teens, in the low teens, 12, 13, 14% compounded annually. Now, is that going to last? Time will tell. The answer is probably not, because historically over the last 100 years, that is way above average. Normally you see the average around 7, 8, 9, sometimes even 10%, but 12, 13, 14, even 15% a year over the last 5, 10 years is so unlike the market. It's way above average, but once again, I'm going to try to beat the market. And so if over the next 18 years, if the market can do say 10%, if I'm able to do 17% after taxes and fees, then I am going to net right at about $1 million 18 years from today. It will be $982,000 roughly, and basically I just rounded it up a little bit. And so basically I'll be right at about $1 million bill at the age of my 40th birthday. Now, will I get this? Probably not. But I am definitely going to post this publicly, success or failure, so you guys can track along. And who knows, maybe one day we'll be making this video 18 years from now or less, and it probably won't even be on YouTube because YouTube will probably be gone by then. But if that's the case, I'll be showing you guys my progress either way. So far, if you can see, let's go ahead and pull it up. So on February 5th of 2022, next year, I need to have $35,250. Now, I'm going to be investing at least $500 a month starting this month. And so based on where I'm at today, I'm actually a slightly teeny tiny bit above schedule. So I'm going to start doing a month by month comparison to this goal, and you'll see that in future videos. But yeah, so basically as of today, I am slightly ahead of this goal. We'll see where this goes moving forward in the future. Hopefully I can get some great market returns so I can keep up with this goal and hopefully reach $1 million by age 40. But thank you guys so much for watching. If you didn't check out anything else down below, there's lots of links to Robinhood, to Webull, to M1 Finance, which you can get $50 for getting signed up, by the way. Yada savings accounts, credit card referrals, swag bucks, you name it. All that stuff is down there below. But thank you guys so much for watching, and I'll catch you guys next time.